Welcome to this week's look at WTI Crude Oil. If you're new to the channel, please hit that subscribe button. It would be much appreciated. So what's happened since last week? Well, I'm going to look at the technical analysis and some other key indicators to find out and have a look at where the price may be heading next. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So no real change on our sentiment indicators. Seasonality at the bottom, a bit weaker at the moment before starting to get stronger towards the end of the year. And our commitment to traders data, we're looking at the black line there. The large speculators still holding sort of weak bullish, coming under the 90 line, the red line there being the large commercials, who are getting slightly stronger, and we expect to see that reflected in the price, the inverse from the large commercials, as we've have the last few days. Prices coming back towards its 50 period moving average and still trading above the 200. Baker Hughes rig count numbers, remember that's the sentiment gauge for the sort of strength and performance of the industry as a whole, and we can see the US line there I focus on, +6, change from prior count, +244 from the previous year, so still looking reasonably bullish. Inventories, nothing to get me excited there at the moment. Last week better than expected, just over 1 million barrels, no forecast in there yet, so probably watch out tomorrow for that one. So not a lot really we can take away from the inventories there at the moment. So the weekly line chart then showing price heading towards that yellow box, the top of the yellow box are created, which is about 76, late $75 mark. There's been a lot of noise over the last few years, so that could be the first sort of resistance point where support could be created for a further buy the dip bounce type opportunity. Or if it breaks under that, it's down into, I say, that yellow box area, with the bottom of it being around about $63. So at the moment it looks like a pullback situation going on after that recent very positive up run. The talk of getting to 100 just slowed down a little bit at the moment. And the line break chart for you swing trades out there, confirming that reversal that we talked about last week, breaking through that 83 sort of zone. So there was nice, $3-4 on the plate there for you. Remember, I use a 4-2 line break setup, 4 for the trend, 2 for the reversal in block size, and that's continuing down, and we'll monitor that again for the change. But the buy-in would be, remember, 2 blocks for me, so it's back to really where that purple line is before I get interested in going longer again. So the Heikin Ashi chart, our signals at the bottom, the two at the bottom there, both bearish, volatility into the mid-20s, about 5% up from its longer term average, so starting to warm up a little bit, and volume under its longer term moving average and a bit more bearish. And on to the price, we've just got a sell signal out of our pink line break box setup, and the price moving towards the bottom part, that salmon pink 2 standard deviation regression band, with numbers around about $76 there, I think roughly, as the support. It's maybe a correction at the moment from the longer term uptrend. It's one to monitor, but it's got into a more neutral position because of the recent sell-off at the moment. Renko chart then, with 50 cents block size, all the signals are bearish. We've got a sell on our two pink line box breakout set up there, and price still holding above the long term moving average. Interestingly, price there seems to be a bit of support there around $80, late 79s. If it breaks from there, then 75, 76, that's 61.8% line, looks a tasty number. And then below that, 38.2%, which is just above $70. To the upside, we've got to get back through that noise between $79 and $85. Break above there, then it's up to $90, $91. Again, in the short term, signal's bearish. Looks like it's deciding where it wants to head next. Could be a correction, a buy the dip opportunity. At the moment though, it's about timing and wait and see what happens. So overall here, I'm going to say it's a bit more neutral on the Renko chart. The recent price correction to me has turned the technicals more neutral as price consolidates to decide where it wants to go next. The Heikin Ashi is a bit of a mixed bag, as you can see. There are lots of colours, lots of different directions, so neutral overall there. Same with the Renko, the signals are bearish. That trend was bullish and overall neutral again. The other factors, line break chart I've added in there, that was bearish, and again we've got a mixed bag. So to me at the moment, a lot more of a neutral feel while we see what happens with this pullback in price. And in terms of targets, upside, well, it's not as good as last week, 1.25, 2 to 1, downsides 2 to 1 and 2.75 to 1, so the probability of a down trade are more attractive at the moment. So this week for crude oil, a neutral score. Now, is this a buy the dip opportunity when we see that price coming off as it is, or is this something bigger and a bigger price correction? Let me know in those comments below what you think is going to happen next. Love to hear from you there. If you've liked the technical analysis in today's video, want to learn more, I'll put a link in the description below. If you've liked the video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.